Accounting Basics Explained, the street food vendor story. Hey everyone. So today I'm going to teach you accounting. But here's the thing. I'm not going to bore you with textbook definitions and complicated jargon. Instead, I'm going to tell you about someone I met who runs a small street food business. And by the end of this story, you're going to understand accounting without even realizing you learned it. Sound good? Let's dive in. Before we jump into the story, let me just quickly tell you what accounting actually is. Think of accounting as your business's scoreboard. It tracks every dollar that comes in, every dollar that goes out, and tells you whether you're winning or losing in the money game. It's called the language of business, because if you can't read this language, you literally can't tell if your business is thriving or dying. Pretty important stuff. All right, now let me tell you about Sarah. So I met Sarah at a local street food market. She makes these incredible gourmet tacos, the kind that make you completely forget about any diet you were on. One day, she told me about how she started her business, and it turned into the perfect accounting lesson. Here's how her typical day goes. Morning. The setup. Sarah wakes up and takes $300 from her personal savings. This is her startup capital, the money she's investing in her business. She heads to the grocery store and buys everything she needs. Tortillas, fresh vegetables, meat, spices, special sauce ingredients, packaging, everything. The total comes to exactly $300. Afternoon. The sales. She prepares 20 premium taco servings. Based on her costs and what the market will bear, she prices each serving at $15. By early evening, she's completely sold out. Customers love them. She heads home with $300 in cash, feeling pretty accomplished. Evening. The questions. Now she's sitting at home, looking at the money, and these questions start running through her head. Okay, I started with $300 and I have $300 now. Wait, did I actually make any profit? How much exactly? Is this business worth expanding? Should I consider doing this full-time? And this is exactly where accounting becomes crucial. Without a proper way to track and analyze her business, she can't answer any of these questions with confidence. Let me show you how accounting solves this. The income statement. The first thing Sarah needs to understand is, am I actually making money? Or am I just breaking even? To answer this, we use what's called an income statement. You might also hear it called a profit and loss statement, or just P&L for short. They're all the same thing. Here's how it works for Sarah's business. Revenue. Money coming in. She sold 20 taco servings at $15 each. That's 20 times $15 equals $300 in total revenue. Revenue is just the fancy accounting word for all the sales you made, the total money customers paid you. Expenses. Money going out, but hold on. Those ingredients didn't magically appear for free, right? She spent $300 at the grocery store to buy everything she needed. That's what we call her cost of goods sold, or COGS for short. Now, to keep this simple, we're going to ignore some other costs for now, like the gas she used for cooking or her time. We're just focusing on the direct ingredient costs. Profit, the bottom line, so here's the math. Revenue, $300, minus cost of goods sold, $300, equals profit, $0. Wait, what? Zero profit? Actually, I made a mistake in my story. Let me correct it. Sarah actually sold those tacos for $15 each, but let me recalculate properly. She spent $300 total on ingredients for 20 servings, so her cost per serving was $15. But she sold each serving for $25, not $15. Let me redo this. Revenue. 20 servings times $25 equals $500, minus costs. $300 equals profit. $200. There we go. Sarah made $200 profit on her first day. Much better. This income statement shows you whether you're making or losing money over a specific time period. For Sarah, it's one day. For bigger businesses, they usually look at this monthly, quarterly, or yearly. The balance sheet, the income statement, tells you about profitability. But there's another super important financial report called the balance sheet. This one shows you what your business owns and what it owes at any specific point in time. Think of it like taking a financial photograph of your business. The balance sheet has three main components. 1. Assets, what you own. These are valuable things your business possesses. This includes cash, inventory, products waiting to be sold, equipment, even money that customers owe you. 2. Liabilities, what you owe. This is debt. Money you borrowed from a bank, money you owe suppliers, bills you haven't paid yet, anything you're obligated to pay back. 3. Equity. What's actually yours? This is the owner's stake in the business. It's what would be left over if you sold absolutely everything and paid off all your debts. Here's the fundamental formula that always holds true in accounting. Assets equals liabilities plus equity. Both sides of this equation always balance perfectly. That's literally why it's called a balance sheet. Let me show you how this works with Sarah's business throughout her day. Sarah's balance sheet. Morning, when she starts her day. Sarah begins with $300 in cash. This is also the money she personally put into the business, so it counts as her equity, her ownership stake. Left side, assets cash, $300. Right side, equity owner's equity, $300. Both sides equals $300. The balance sheet balances. Sarah's balance sheet, after shopping. After the grocery store, she bought ingredients. She spent all her cash on ingredients. Now she has zero cash, but she has food inventory sitting in her kitchen ready to be prepared. Left side, assets cash, $0. Inventory, $300. Total assets, $300. Right side, equity, owner's equity, $300. Notice something important here? She didn't get richer or poorer. She simply exchanged one type of asset, cash, for another type, inventory. Still balanced at $300 on both sides. Sarah's balance sheet. Evening, after selling everything. Now she's sold all 20 taco servings. Her inventory is completely gone. She sold it all, and she has $500 cash in her pocket. Left side, assets cash, $500. Inventory, $0. Total assets, $500. Right side, equity, owner's equity, $300. Whoa, wait a minute. The left side shows $500, but the right side only shows $300? The balance sheet is out of balance. Something's definitely missing here. The missing piece, profit. Remember that $200 profit we calculated in the income statement? That's the missing piece. When Sarah made that $200 profit, her business became more valuable. The business is now worth more than when she started the day. So we need to add that profit to the equity side. Right side, equity owner's equity. Initial investment $300 plus net income. Profit earned $200. Total equity $500. Now both sides balance perfectly. Left side, assets $500. Right side, equity $500. This is the critical connection between the income statement and the balance sheet. The profit you earn increases your equity. These two financial statements are fundamentally linked. The big picture. Let me quickly recap what we learned through Sarah's street food business. The income statement tells you how much money you earned, revenue. How much it cost to earn that money, expenses. Whether you made a profit or took a loss, net income. This covers a specific time period, a day, month, quarter, or year. The balance sheet tells you what you own, assets, what you owe, liabilities, what's actually yours, equity. This is a snapshot at one specific moment in time. And these two statements connect through profit. Your net income flows into equity on the balance sheet. So that's accounting basics. Not so intimidating when you think about it through a real business story, right? Every business, whether you're selling tacos, running a software company, or providing consulting services, follows these exact same principles. The numbers might get bigger and more complex, but the fundamental logic is identical. If you found this helpful, hit that like button. And if you want me to break down more accounting concepts using real-world business stories, let me know in the comments what topic you'd like to see next. Subscribe so you don't miss future videos, and I'll see you in the next one.